following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman. My pleasure to be here Monday through Friday on market days. And today, of course, being a market day, and although it's Veterans Day, many of the places, many of the certain government institutions are closed. And of course, we're thinking of our vets. It's just a really important period, a time for reflection, and need to say thank you to our vets, certainly. And we're looking at the Dow down 37, 17,720, S&P down 361. 2,078. Also, we've got this is kind of interesting. The comp index is down 7 at 5,076. So you still got that Apple veneer that's kind of rubbing off. It's been a negative the last week or so. Even more important than almost anything else is that we need to look at the TLTs down 14 cents at 118.54, and bonds are down. Bonds are at this particular point down 11.30 seconds, 152.08. Dollar is down 22.30 seconds. That hasn't helped gold all that much because gold is down $1 at 10.87. Silver's down 0.01 at 14.34. Platinum's down. High-grade copper, woohoo, up 50 cents at 222. Crude oil is down at the 43.20 level. Remember, we were looking at crude oil just stuck in a trading range for now. And the euro, obviously, is just a little bit higher because the dollar is down. I'm showing you here the 10-minute chart just based on the Chapman Wave methodology. So in this particular instance, unlike this chart over, am I going to find the right one? This chart over, over here, which has the technicals, the MACD, stochastic, moving averages, relative strength, on balance volume, Bollinger Band. This is the 200-period exponential moving average at 2,078 on the E-mini, down 5 at 2073. This is just the naked chart, and using chart formations that I always say, look at this. Especially leftists, I wanted to do it now. I thought, no, let's do it during the program and see where the market is at that point. Look at this. You've got yourself the pattern that I call the H pattern right there. And the H pattern has just 3 rules. One is, this is in the Chapman Wave methodology, that if the low, this left side low bar before the arch is made, and when the arch gets started and turns around either at an A or a B and a failure, or goes to a D, this actually had 2 peak Ds in the 10-minute chart, and then it turns around. If it comes back down and takes out the low, in this case 2062 round number low, that's a negative. If it closes under it, it's very negative and says the upside is now very limited until you get a complete new buy signal in the technicals or in the pattern itself, like a V-shaped turnaround. And the other says, if you close below, if you don't close below and you come back in, that's key. To go together with the closing below, I always say you've got 1 bar, maximum 2 bars to get back to the left side low that was pierced, in this case 2062. Well, it turns out that was the midnight low, and there was a rally all the way to 12. Wait a minute, that's not midnight. That is noon yesterday on the 9th. No, that was 2 days ago on the 9th at 2062. And that was at noon. And then it rallied sharply twice, and it went all the way to 2078.75. That was at 13. That was at 11:20 in the evening of the 9th, and then turned around and makes the arch formation. That arch formation went only down to 2064.50, not 2062. That says that the next rally could take out the left side high of importance, in this case 2075, and if it does that, then you keep looking to the left side at each successively lower high that was made, those peaks on the left side. But if there is a close at any point above the major high that was made at 2078.75 at 11:20 on the 9th of November, that says that this particular price that you're following could go higher. Well, lo and behold, it goes to 2079. Remember what we're looking at? 2078.75, 25 cents higher, fails there. In fact, just for this purpose right now, I'm going to do something I'll show you right now. Going to do a left side to that low, right side, see if there's a price time match, and we go to the right, and we call that green. Okay, so it goes, to the exact, it goes right, it makes it earlier, two 10-minute bars earlier. It breaks that high and pulls back, makes a cup formation. Look at this, cup formation. And in the Chapman wave methodology, a cup formation is very powerful. It becomes the Chapman wave cup and ladle, not the cup and handle that you hear about in IBD, Investor Business Daily, and many other technical sources. This is a cup, this is a breakout pattern. And that breakout pattern says if you break out, you're going to go to a D. You could even go a little higher, but at some point, what's going to be very important is how you come back to test the left side lip. That's at 2079, number one. And number two, if certain conditions are met, you could actually start to break out and go even higher. Well, what happens is it goes to 2081 round number at midnight on the 11th. And that was last night, starting the 11th. And it goes double tops at 2081, and double tops, and then pulls back, and it pulls back from that level right to the 2077 level. Now what you've got is a nice trend line that's going higher. You've got a rising trend line, but within it, you've got yourself a shorter one, a one that goes right there. A one that goes, that pink one, and that says, that's your resistance. And this is the pattern that you've got to be careful of because there's something called an expanding wedge. Well, what it does, it goes like a brand new buy mode from 310 this morning, and it goes peak A, B, C, makes a cup formation, breakout. What does a Chapman wave cup and ladle say? A breakout above, that is going right through the left side high. In this case, I have 2084.50 made at 410 this morning, says that you should go to at least a D. You might even go to an E, but from a D, you've got to be careful because there's a good chance you're going to at least come back to test the lip on the left side of that 2084.50 level. What does it do? Goes to a peak D, hits that expanding wedge trend line resistance, can't hold above it. Then it closes exactly on and goes to a peak E at 2087.25 and then kaplop. And what I had shown subscribers this morning when I showed my E-mini chart is that we were expanding, that we should have a pullback. So the pullback was extremely sharp. It went from 2087 to just 20 minutes ago. The low was just over 20 minutes ago, 2069.50. And now it's trying to find some kind of support. Now, I wanted to go through that because there were a number of technicals, number of things that people were asking me about. There's your left side, right side price time match, went under it. Remember, it has two bars. If it breaks under this left side low, in this case, 2071.50 made it 230, 230 last night. Then it says you've got only two bars to go and then close back in. That's exactly what we're doing. We're at 2072.50 right now. This is going to be a very important part. I've already drawn an arc formation. Now, I'm going to talk a little bit about that right now because what is really important at this is such an important phase because what I was looking at, we got out of a couple of short positions for pretty much almost a break-even trade, a 5% gain on one, a slight, I don't know whether you got out at exactly the entry price, but it must have been just a few pennies below if it was below. But at the same time, I'm trying to add a couple of shorts, but basically we're almost stepping aside today. Why? And I'll explain why. When I sent out this daily and 120-minute chart, and I also happen to have included, just for today, this 10-minute chart right inside here, I was saying that this is the trend line resistance in the 120-minute chart that we need to be focusing on. I just for the moment want to get rid of this and show you something else. Now, I'm going to get rid of that. At the same time, I'm going to show you the daily chart of the Dow. And what I'm looking at here, and this is, for me, kind of important. I have a rule of thumb. Well, 2 thumbs or 2 fingers, whatever it is. 136. 136 is the second inversion on the piano. Nah, that was a chord. I just added that. It is in fact, it is important, but this is something different. What we're looking at here is that in the Dow chart, look how few from the low that was made on the 29th of September at 15,942. Look how few black candles there are. There were only 2 really serious black candles up until, I can't now. Let me do it now. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 3, 4, 5, 6, 7, 8, 9, 30, 31, 32, 33, 34, 35, 36. I think it's 36 bars. Let's call it 33 to 36 bars. In all those bars, we've only had 2 ugly candles. One kind of not too bad. It hit the 7-period moving average right there and held. But basically, we've had only white candles or dojis. So this has been what I call a takeoff move to a buy signal that went to a buy mode. I've changed this. I have to call this a peak F because the technicals are failing. Everything about it says that we've closed under, just barely under, the 9-period moving average. So I have to put a down arrow. That's not to say that we can't recycle and go higher and make a G. It's not even to say we couldn't recycle and start a brand new buy mode. It just says that everything technically has met the conditions where I, in a daily chart, have to put a sell signal to sell mode. But here's the thing, the 136 comes in. And what is it? And one of the reasons why I had a couple of emails, because in my Traders Corner, I had about, how many bullet points did I have today? Let me just check if I can find it. Right there, okay. 19. There have been between 19 and 21 bullet points. That includes the Dow Diamonds, the DOG, the 100% short the Dow, the 300% short the Dow, the Qs, the 200% short the IBB, and a whole bunch of things like GLD, General Electric. We don't have a position, but it's been acting so well that I just cannot ignore the fact that there's internal strength based on that indicator, which has been so fantastic for so long. My GE indicator, one of my Dow quartet. And yes, that's correct. I did get an email suggesting that I've got 2 defense stocks in my 4 stocks making up my Dow quartet and index, and that is GE, IBM, Triple M, and UTX, and that means GE. Yep, I would say partially defense, and certainly UTX has quite a lot, but they're really conglomerates in the big, broader sense of the market. Now, this is going to be important. The Dow's down 39, the S&P's down 4. You've gone 1, 2, 3, 4, 5, and this is the 6th session. When you do that, it says to me that you're looking at time. Now you've got to understand what price is doing. I'll be back and discuss it as soon as we return. Dow's down 37. Basil
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new market-safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let fallen markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back, and there are a couple of things. I thought I'd put this page up. It's called Market Top Comparisons. It's what I use when I do my webinars. I've been showing for quite a while. And I thought sometimes I like to just put how many boxes are there? 1, 2, 3, 4, 5, 6, 7, 8, 9. 16, 18, 19, 20, 20, maybe 21, something like that. Odd number, shouldn't be, but it is. And I just like to look. I like to say, hey, where are we and what's going on? I've spent a lot of time on some of these charts, especially over the limited time I had over the weekend was really devoted a lot to looking at the larger trends. And one of the reasons why I wanted to talk about the 136 is that in some way we're using time not yet all that much in price. Now, when I'm glancing at this, all of a sudden I see before me, I see a pattern and I say, hey, that looks familiar. Anybody recognize this? Why? It looks like the Chapman Wave stalk leg formation. So let me color the inside in black so that we're not doing there. Let me color the outside a different color. Let's make it white. And look, there it is. A long leg. Here's the body. Got to make it over there. And that says, woo, you've made higher high, lower low, lower high, so far a higher low. And that's, I didn't look at it quite this way before. I was looking at it in a different, I I was looking at through the eyes of GE and a number of stocks that are acting extremely well. Facebook, just a lot of stocks that are saying, you know what? There's just over the weekend while I was in New York, I had quite an experience. We went to see grandkids and all that family to see The Lion King. Well, it's been there for 18 years. I don't know any of this, didn't know any of the songs. I just heard about it for years and years. We decided we'd go. And the choreography is, for the time that it was done, to this day, is just stupendous. The puppets, the way it's all engineered, the way it's put together, the music, really well played and all. There were a couple of songs that were really catchy, but mostly the music was just very good. But it wasn't, the Broadway stuff that you always hear. And I was actually looking forward to hearing a couple of tunes that were really quite different. But in a sense, it was still very wonderful production. Okay. There were a couple of a lot of South Africans within it. And of course, I'm originally from South Africa, so I was intrigued. And the drummers and the lead singer, she was just fantastic. I thought to myself, okay, while I was listening to it, it just also happened that on the way there or back, I can't remember for a moment, there was a Beethoven piece. And I said, you know what? It's time I spoke about the coda. So I'm going to do a couple of things right now. I've got a bunch of questions I'm going to get to in a moment, but I just wanted to talk about this. I like sometimes just to reflect. For instance, today we were very light in positions. We've got our positions. I'm quite comfortable. We'll see where they're going to go. I didn't want to over add. There's one I would like to get. We've missed it so far by 1 penny. I think we might be able to get it. We'll see. But look, I love to just peruse a page, and all of a sudden I saw that this here was the Chapman Wave Stalk Day formation, which suggests that if there's a break above this high right here, whoops, Dow, why is it giving me the wrong thing? Wait a minute. This is the Dow, and I'm clicking on, and I should be able to get 7056. What's 70? Oh, wait a minute. What's going on here? Dow Industrials, and it's at 6793. That's not right. Wait, I'm going to open this up to see what I'm doing here. Oh, thank goodness. I looked at this. That formation is, in fact, the Dow, certainly, but it's back from July, the low of 40.60 after hitting 386 all-time high in over the Labor Day weekend of 1929. This is the 1932 low of so that's why I like to put these charts up. Very interesting, but there's the formation, all right? Okay, so I wanted to do that. And the other thing I wanted to talk about now, I wonder if I'm going to be able to find it. Probably not. Let's see if this is the one. Yeah, no, this is not the, yes. So this is the one with those phases. This is phase 7, the coda, the big coda that's going on right now. And the coda says that new bull market low in 2009, low of 64.69, going to where? Well, it had a whole bunch of conglomerate of peaks, and I had drawn the 7-year pattern right here, which it came into exactly. All right, except we've pulled back very sharply, 3,000 points. So that's from 18,300. We pulled back 3,000, and look. We've come right back up towards that high. So that the Beethoven reminded me of the coda. That's number one. The other is I just wanted to mention how fantastic that was, the choreography and everything of The Lion King. And now we're going to go to the questions that were asked.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So this is what I wanted to look at. We're back, and Dow's only down 21. S&P's down 2. Yeah, that's the reason I was looking at internal strength based on GE, Facebook, and a couple of stocks that are really important. I don't care whether it's a handful. Whatever it does to the indexes, if it can move the indexes up, I got to be careful. In fact, we had a short on I'll talk about it in a moment because I'm going to show you some charts on Home Builder, which dropped quickly and sharply. And now it's come right back. And when I tightened the stop up, we took a 20-cent loss on a $49-something stock. I mean, you know, I'm tightening things up. I'm not prepared to fight a trend. Look, if interest rates are moving up a little, you've got to say, okay, that would affect the housing sector. Well, it did affect the housing sector for a moment, but let me show you something here that's very interesting. See, this is a leg B, but a gray B, under that yellow in the 30-year yield. Now let me show you something that correlates with this. This is WOD. This is the iShares Global Timber and Forestry. Remember I said that it moved higher, and that I was expecting that at peak B, it should find a lot of resistance. This is a weekly chart, and this is gray A, gray B, rather than yellow, meaning that it's retracement mode. And I have drawn in the arch formation. But at the same time, look at the home builders. This is the housing sector, the Philadelphia HGX index. it's moving up quite nicely. Steady. It's hard to believe that an index could go to 233.23, 234.32 the next week, 234.19. So that makes an A right there, gray A. But the narrowest of moves, and the next week it goes to 234.57. So that starts leg B, and this week it started at 235.32. So what it's saying is there's enough resiliency that the home builders, you remember D.H. Horton, had a really good session yesterday, almost one that I thought we'd go for a quick long position and go for a little ride to the upside, but I really didn't feel like playing games here, so I stepped aside. And look at this, just a gentle move, nothing great, but it is that retracement. And it says at 235, the HEX index could in fact try to test 237, somewhere around there. That'll be really important if it can break above that. So it means just in the very short term, there's enough residual strength. I want to get out of this now, show something else. So close workspace, save, yes to all, goodbye. And now what we want to do is we're going to go to the question. Oh, I must mention, the only reason why I brought up New York just a moment ago is because, well, there were two basic reasons. One is I happened to glance at all the hotels. They have all these different newspapers. The Wall Street Journal, the USA Today, my own paper, Boston Globe, that I had the email, Boston Globe electronic, and a couple of other papers that I happened to glance at. There were quotes from so many people saying the stock market is overbought and it should be coming down. I thought, oh no. That's already a tip-off to say we're going to be there's some kind of internal strength here, at least on the rebound. And that's another reason. So that was the one. The other is I did my usual thing, perusing different places, different areas of Manhattan and Brooklyn and the surrounding suburbs of Brooklyn. And I don't want to take time now. I will talk about it maybe on Technical Friday. I think it's really important what's going on here and the benefits that have accrued and the negatives, huge negatives going forward. Just like in Boston, the redevelopment of the waterfront is forever. It's for decades, hundreds of years maybe. You cannot go back and eliminate all those properties to make open space again. So those buildings, the design, the functionality, the whole idea, the concept of environmental containment so that you can have parks, you can have a livable space. What you're looking at on the other side of the river, where the Roosevelt Drive is, between Roosevelt Drive and Brooklyn, on the river, you've got buildings that are going up like those matchbooks that you used to get the boxes, rectangles, just big rectangles, like co-ops almost. Terrible, terrible thing. But the actual design of the waterfront itself, there are a lot of things that are very positive. I'll talk about that later. Let's just go to the EEM, was the first question. EEM is the iShares. I'm not positive on the EEM. I think it's in a failure mode, made a peak D doji back on the 23rd of October. So this is the iShares Emerging Market Index, ETF. And I think it's stalled. It's almost looking like the TLT right now. It's kind of stuck. My suspicion is that it's got 34, 36 up to 09. It has limited upside just for now. 36s is the upside and 32s is the downside. Just kind of stuck for now. That's what I'm looking at. Next question, was that? Yeah. EEM. Oh, and USO. That was a combined question. USO, I don't see anything. This is the one that has the same pattern but failing. And the USO looks at 13.78, United States Oil Fund. It looks to me like it's going to be absolutely imperative how it tests 1361. That's just what, 16 cents away from the low today. If it takes it out, it means that you can go all the way back down to the 1237 level. And you remember Jerry in Boston talked about this, been negative for a long time. I think Jerry's absolutely correct. Crude oil has a real serious problem, a political problem as well as a technical problem. Okay, so that's that. Next one was WMT, Walmart. Great question, because Walmart, important stock, same pattern, the H pattern, gone to a leg E, maybe a trough E. But the weekly chart, just look at this. Remember, someone asked me a while back, is this something to buy? And I said, don't touch. Big, don't touch. Why? Oh, to short. Yeah, you could short it. Not now, but you could have shorted it. Now it's a little bit risky because it's so close to maybe a bounce, but only a bounce. And I just, this is not a good chart. And that takes us to the next question, which is the RTH. What is the RTH? RTH is the Market Vectors Retail ETF. Now, this is going to be really important. This is the season coming up here. What's going on with Apple? Oh, maybe I'll do that as well. Let me put that down here, Friday. I'll put Friday, Apple Store. I don't want to talk about Apple, but Apple Store. I want to talk about Brooklyn. It's not just Brooklyn, but it's Brooklyn and Boston. Brooklyn, Boston. I'm not talking real estate. I'm talking about design. Now, I'll add to this as I move along. So this is what I'm looking at in the RTH index. It had a spectacular move in the monthly chart all the way to the 2-bar reversal at 79.50 and 79.25, the 2-bar reversal back in July and August. Now, this is going to be very important. This candle here is still the Chapman Wave Roman candle. So we're watching it real closely. And there's a pattern that I drew in here. It actually is extended now because you did go to that leg C and then peak C. So I'm going to put that in right there. So we've got a peak D. And this peak D is suggesting that this is such an important period for the RTH because the retail index with the season coming up has held very well. It's at 76.78, down 74 cents today. Hey, but that's only 4 points, not even 5% off the all-time high. But this is going to be very interesting. Do we go sideways? Remember, 1, 2, 3, 4, 5, 6 bars of consolidation in the Dow suggests that you're going to, if you don't have a nice pop-up on the 6th bar, it means you're going to go maybe to the 9th. This is going to be very important. We've got almost the same thing here. Since the peak was made on the 4th of November, in the last peak in the daily chart, we've gone 1, 2, is that a high? 78.40, 78.40, double top. So double top, I'm including it as the consolidation. 1, 2, 3, 4, 5. That makes the 76.20 to 75.43 area absolutely imperative to hold over the next week. If the RTH starts to break down and goes below 74 in the next week and a half, it's going to suggest to me that the season coming up, the holiday season, is going to be vicious with cut prices and online not knowing what to do with the Black Fridays and whatever it is. But it's going to be a really tough season. You've already seen that. I think Tom was talking with Tommy about Macy's. I mean, look at Macy's chart. Gaps down today. This is terrible. 73.61 to today's low of 40.76. I would say that a 32 point correction is 48%, 49%. So this is not so good. So how could I even think that we could have a bit of a rally today just to keep stalling for a tad longer? Because if you look at GE, I haven't finished the next question, very good. So I covered that for Sarah. So the next question is GE and OEX. Gee, I haven't looked at the OEX for a long time. Look at GE up 47 cents today, 30.59. GE is the leader in the market. It is at recovery highs. It is not only at recovery highs, but at 30.58, it is within that 30.39 level that we were looking at. You remember the high of August of 2008 in the monthly chart. That's being tackled right now. A decisive close above that says two things. It says not only was I correct in suggesting that the weekly chart had broken out into a new buy mode. I'm very upset. I must apologize to subscribers. I actually looked at this and said it's acting well, but we want to use it as my indicator. I don't want to make it fuzzy by going to turn it into something we own, because then it's very hard to not be biased. But you know what? I'd rather be right and get the price all the way from the 20s, from 1937. So if you got it in 22, 23, you'd be up 7 points, 20%, not bad. Anyway, we do not have it, but we use it all the time, every day. I give parameters, and even today I said there's still internal strength based on GE. Just this one stock It's just the way I use it. I would not hand it over to you and say, hey, use G as a technical indicator. You really have to know how to use it and why you're using it, etc. But at the same time, I am very impressed with the action of GE, and it's suggesting to me that the cyclicals, not all the cyclicals, but some of the cyclicals are showing just enough strength to be able to A, B, C, D. Yep, it's getting close to a little bit of a pullback, but this is suggesting to me that you've just got to be a little careful by being overly short. You've got to be selectively short, put in your buy stops, or if you're long the ETF that is a short ETF, just make sure you're not getting carried away by listening to, like the New York Times or whatever it was, when what is it called again? USA Today, as well as the any financial papers that you're looking at, to say that quoting all these guys that are negative. Yeah, I too am negative in the sense that I'm talking about a consolidation. I don't have a signal yet to say that we're going to smash to the downside 12% or something like that. I do believe that we're getting close to a 5% pullback. Might have started already, but today's got to run its course. There's GE. So that was the question on GE. GE is looking great. It has at 30.57. It has 29.80 to 29.16. Actually, 29.80, 29.84, 9-period moving average. 29.56, next one. 29.16 is the, I believe that this is the 21. Oh, I didn't even realize I had a 21 here. Is the 21-period moving average. I'm not sure why I had that. Oh, I had it because of a couple of reasons. But at this point, it's just there. I might take it off. So we've got all these levels of support. So I think that G's acting very well. And it's telling us a little bit about select internal strength. That's all. Okay, so G, and the next question was the OEX. Gosh, I wonder if it's going to come up here. OEX. Yeah, if you don't mind, I just want to check to see if I've got, the OEX looks pretty much like the S&P. So I'm going to go to the XMI, which I think is a far more important one. And of course, all my notation's gone. What a waste of time. What a waste of time. So that's A, B, C, D, double top. A, B, C, D, E, F. That's right. And it made a peak F in the XMI in September at 1920.30. Why do I talk about the XMI? It's the ARCA Major Market Index. It used to be a fantastic vehicle. You used to be able to trade options, all sorts of things on it. But what's really important right now is that I love it because it has a mix of defensive, aggressive, and cyclical stocks, so that you get it. The pattern that I look at is far more balanced in its portfolio than many of the other indexes. And actually, at this particular point, it's acting very well. It says this is a leg B. It's probably going to make a peak B today, peak B this week, if there's no new high. And the big support, 1821 right now, is at 17, I'd say 1795 to 1779. 1779 is the 9-period exponential moving average. 1798 is the daily 200-period moving average. So I'm just watching it. It's actually looks more like a sideways move, and that's the issue. So now I'm going to go back for a moment and say, you remember I spoke about 136? And that 136 suggests, let me show you something here. Whoops. The 136 suggests, if I can squeeze this chart, here you go, squeeze one, squeeze two, squeeze three, move it over to the right. You see that correction there? That correction was in fact the high at 18,351 back in May in the Dow. And we did come down all the way to the 15,370s. But look how you went, 1369, and then it pulled back. I'll talk about that.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
All right, folks, let me just grab this chart. Remember the 10-minute chart? Remember I said I think we've made some kind of a low, should be a bounce. During the arch formation, we just took out the top of that arch formation. This could be quite a nice bounce here. This is that residual strength that I was talking about. Let me just draw a little higher, maybe about maybe 1/3 of the way up to a half, and you'll get some kind of a pullback again. But this is very important. So look, there's nothing, no technicals here. It's just the Chapman methodology: trough A, trough B, trough C. If you rally from a trough C, you can have quite a nice rally. So this is a nice rally from the 269 area, what was it, 269.50 to the high that was just made a moment ago, 277. Hey, I'd say 8 points. Nice. Okay, so I just needed to show you that, and let's get out of that. And the question I had was M and KSS. Time to nibble was the question. Wow. Don't touch M. Macy's, something's gone wrong there. It was a fantastic retail company up until peak F top at 673 back in July. Since then, it is just virtual. This is the Eiffel Tower, straight up, whoosh, straight down, elevator down, elevator up, and parachute down. But KSS, which is Coles, the question was, I think Coles is ready for a bounce, but it needs to form a base. It could make a V-shaped turnaround, but I would not at 42.89 down 271 today. Maybe it's a sympathetic move. Look, it's under the 200-period moving average in the monthly, 47.08, 5 points below. It is under the 55.62 200-period. So that's going to become a repellent, but the 9-period moving average will become an attractor, a magnet at 46.77. But you've got to find some kind of a base. Hey, I would prefer, because it could still pull back another 2 points before it turns around. That's 5%. 5% risk when I'm only looking at a potential for 2-3 points, 6% maximum to the upside. Stay away. It's not worth it. This is not the sort of thing I'd be messing with. You want to play games? Play games with a thing like a Facebook. Buy the ones that are going to all-time highs. So you buy less at 108 than you would at 44. But that's what you want to do. That's what I should have done today, just to see if it could get to the high and test it, because it's acting so well and fund managers are grabbing these. Hey, we've got just limited time here as we close out, going to Daryl in a moment. Stay tuned for great programming all the rest of the day. Here we go. So I wanted to show you the VIX index. And that VIX index right now is at 1540. The reason why I didn't want any part of the VIX today, we took some profit yesterday, I just didn't want anything today, is two reasons. One is the pullback yesterday was way too big, and it was suggesting to me that the buying of the volatility index as a fear factor, as an insurance, as a policy that says, I want to protect my portfolio, or I just want to play all out a position on the long side of volatility as the market pulls back. I did not see that advantage yesterday, not when you repelled twice on the 200-period exponential moving average. So the VIX is important. If by the end of the day, instead of being up 35 points, which is there's a chance we could do that, or more in the Dow, or 3 points in the S&P, all of a sudden there's another reversal. That's when you want to watch the VIX. If for whatever reason, at 1540 now, if the VIX at 250 at 10 minutes to 3. If the VIX, the market starts to pull back again, that's the one I'll take a little more seriously. And if the VIX is, instead of being in the 1540s, is now trading at 1585, no, 1620, because all of a sudden there's this fear factor, then I'd say, great, now maybe you can make leg C up in the volatility index. But I got a feeling we've got some buying here. I didn't want to get in the way of the buying, and I'd rather be participating a little bit. We've got one stock that's done just fabulously, just under the radar. Nobody's even looking at it, and percentage-wise, that is. And I like that. And of course, we're still on GM, and GM, good grief, I keep waiting for it to pull back, and it's just holding beautifully. I want to buy more on a big pullback. It doesn't do it. Hey, folks, stay tuned for Darryl and all the rest of the shows. Thanks for being here. Check out my opening call. I think you'll find it very...
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.